Nirmal, ladies and gentlemen. I'm Hirodaria. We have with us Mr. Kalpesh Dave, Head Corporate Planning and Strategy at Star Housing Finance, joining in. Welcome to the show, Kalpesh, and always a pleasure to speak to you. Firstly, congratulations on a blockbuster first half and a quarter that we've seen from a Star Housing Finance. If you could just help us understand what has led to this kind of growth.
Yeah, pleasure's all mine, Hiral, to be on the show and talk to you. Really happy to share the company updates, specifically, the first 6 months that has gone past by. And, it's basically boils down to, two parts. First is obviously the macros, which are the tailwinds that are assisting us. And as I have previously also said to you that it's the rural India that is going to chart out the growth trajectory from here on for the overall macros. And that holds true for the housing sector as well. So obviously the tailwinds are there. And as I said, that the trinity of the nuclearization that we are seeing in the rural space, coupled with the infrastructure development and the digitization that are happening, and the reverse migration of the population has basically added to the demand for housing stock in India. And Star Housing, being a rural-centric, rural-focused housing finance company, we are seeing that uptick in the home loan applications that we are receiving across our locations. So just to answer to your query, yeah, the favorable macros are there, and coupled with that, what we have done is that we have ensured that the capacity gets created to meet this incremental demand emanating from our geographies. So we have now presence at around 20 plus locations, which cover 40 plus districts in our existing geographies of Maharashtra, Madhya Pradesh, Gujarat, Rajasthan, and Tamil Nadu. We have a staff strength of around 125 plus people who are stationed across these geographies and across these business functions. They carry the requisite domain and the experience to cater to the housing finance requirements. And obviously, the overall ecosystem with respect to the strengthening of corporate governance that we have done by inducting the independent directors coming from BFSI space, development of the risk framework, defined policies and guidelines that helps us to scale up in a responsible manner. And obviously the digitization part of it. So we are investing in the lending suite, which would enable scale up without compromise on any of the quality. So it's a mixture of these things that I told you has enabled us to register a record performance. The disbursements that we have done during the first half of the year basically surpasses whatever we have done over the last 10 years. So that you can imagine the kind of growth that we are envisaging. And obviously H2 from here on would be better than H1 traditionally for all the lending companies, and that holds true for Star Housing Finance as well. So we look forward to cross one milestone after the other in line with our business plan.
Right. I mean, that's a great, process and a great, strategy that you've been following as well. So overall, if you could just help us understand, yes, the growth is coming in from rural India. Currently, if you have to divide it between, the regions between north, south, east, west, what's the revenue breakup?
So as I said that, we are predominantly right now present on the western part of it, which is the geographies that I just mentioned. We have presence in Tamil Nadu being the second biggest market in affordable / low cost housing finance space. We are present over there. So if I talk about the geographical spread, around 55 to 60% of our loans get emanated and disbursed from the state of Maharashtra, followed by around 25% in Madhya Pradesh, 15% in Gujarat, a bit of it from Tamil Nadu, and remaining from Rajasthan. We decided that we want to diversify geographically and tilt the favor in the balance of the respective states, and hence the traction has happened in the remaining new states where we had opened up. From here on, if we see, the disbursements will be evenly poised in all these geographies as we build up capacity in these respective locations here.
Right. And overall, if you see in terms of the loan book as well, now we've already crossed 150 crores.
That's right.
The plan is to get to 500 crores. What's the timeline that we're looking at?
So, again, I would not want to give any forward-looking statement over here, Hiral, but, the kind of capacity creation that we are doing, that will envisage us disbursing on a stable basis around 35 to 50 odd crores of, loans from these geographies. We will continue to expand in these existing geographies, which means that we will be penetrating deeper at the district level, at the taluk level, also at the village level where the potential holds true. And that's how we are going to expand over a period of next 4 quarters. So if I want to give any headway onto this, next 4 to 6 operational quarters is somewhere we would see us getting converted into a systemically important housing finance company. Obviously there are a lot other factors which come into play, but this is what the business plan is. And I think the capacity that we have created and the domain that we are onboarding, coupled with the overall framework that we are providing, we should be able to reach that particular mark, give or take plus or minus 2 quarters.
Right. And will the 500 crores AUM mark come in from Maharashtra, Madhya Pradesh, Gujarat, Rajasthan, and Tamil Nadu alone? Or do you think we will be adding newer states to?
That's right. So as I said, we'll be penetrating deeper into these existing geographies. The next logical expansion that I can see, obviously it has to be validated by the Mancom as well as by the board, but we see ourselves, getting entrenched or getting entered into the geographies of Uttar Pradesh, Haryana, and the NCR region from here on, when we seek to expand in the newer geographies, if I can speak on that part of it. So these are the centers which our internal research, coupled with the secondary data that we are assimilating, shows us that holds potential for further scale up, and these are the geographies that we will be focusing from here on.
Right. And overall, if you see in terms of the average ticket size, will that continue to remain around 10 lakhs?
Oh yes. So our customer segment and the operational geography, Hiral, remains the same. We will continue to cater to the housing finance requirements of economically weaker section, low income group people, the first time home buyers who wish to purchase or construct their own home in semi-urban / rural geographies, with a ticket size of around 25 to 30 lakhs, and our average ticket size will continue to remain in the range of around 10 to 12 lakhs. In fact, in the rural geographies, I would want to say that it is in fact lower than that. So that would be the customer segment that we would want to be in, be it 500 crores or be it from there on. So we have firmly resolved that we will continue to be in the retail space in this particular customer segment in terms of the person as well as the geography.
Okay. And overall, if you see in terms of the growth that we are seeing, will we be able to maintain the same momentum? Because as and when the absolute numbers grow, usually the growth percentage starts going down. But what's our trajectory?
So you hit it very well over there. Our base has been really very, very low, right? So right now your numbers would look into the percentage of 480% PAT that we have registered for the H1 on year-on-year basis. That obviously is gonna get normalized. But if I talk about growth from an absolute percentage, even when my base builds up, I would again refer to the industry average of the growth of mortgages in these particular geographies. The low cost housing finance space has always been a step up. It has always been at around 30-35% CAGR growth, even if you take into account the last 5 years, considering the COVID-19 pandemic. So we would see from here on, over the period of next 40 to 60 months, we should be growing in excess of around 30% from here on, be it whatever base we are creating on that.
Right. And overall, if we see in terms of the leverage as well, we are less than, I think, 1 time.
That's right.
So how good are we in terms of further borrowings, in terms of credit lines? And currently, what is our rate at which we borrow?
Yeah. So the raw material is money for any lender, any housing finance company, right? So what we have been consciously doing is that we have been capitalizing ourselves very well. That has been the strategy. We decided, we resolved that we need to have a firmer base of capital. So our net worth is slated to cross 100 crores here, subject to approvals being met in the latest capital raise that we have done. We have raised capital around 3 times over the last 12 months, the latest one being done in this month itself. And that basically paves us well for the further build up, and hence you see the leverage levels being normalized, even in fact coming down to sub 1 level. So now what we are planning is that now we will be building up, we will be kicking in the liability machinery. We have a very, very strong liability franchise. Previously also I said that our focus has shifted from the financial institutions to public sector banks. So public sector banks will be the major focus. We already have an existing line from the likes of State Bank of India, Bank of Baroda, Union Bank of India, Indian Overseas Bank. There are other public sector banks where our applications are there in advanced stages of processing, and there are private sector banks with whom we have started engaging. So this basically will form the fulcrum of the overall credit lines that I will be targeting. Obviously, we also enjoy the refinance lines from the National Housing Bank, and NHB continues to have a relationship with Star Housing Finance. And subject to our performance and other criteria being met as per the NHB guidelines, we see that further uptick should come from the National Housing Bank as well. But that all depends on approvals and other aspects being met. But yeah, if you are talking about independently, the public sector banks is major focus for us. Given that we have crossed our net worth of 100 banks, that will be increasing.
Yeah. So Kalpesh, what's the exact cost of funds currently?
So currently the cost of, I got disconnected, I guess. So I just want to tell you that the existing crop of lenders coupled with the incremental lenders should see us increasing our leverage from the current sub 1 levels to around 3.5x, and that should basically pave way for the 500 crores of AUM that we are targeting. Our cost of funds currently stand at around 10.5%. We basically enjoy a spread of 4.5 to 500 basis points on the incremental lending that we are doing. And as and when the borrowing cost gets rationalized, as and when we get re-rated, the same spread we are going to maintain in our existing geographies and the newer geographies.
Right. And overall, if you see in terms of the asset quality as well, we have improved. So is this the level that we'll maintain, or we will be see a further improvement from here on?
Yeah. So that's a very pertinent question. I wanted to highlight this, that our asset quality has improved. Our portfolio at risk that we define has basically come down to single digits. Okay, our NPA levels are GNPA levels and NPA levels are in line with the business plan that we have envisaged. And from here on, as and when we grow, it's only further improvement that you will see. So our on time record on the collection part of it currently on the overall portfolio stands at around 91% plus, and as we grow from here on, it should cross around 94-95% from here on.
Right. And overall, if you see in terms of the NIMS as well, we are seeing a substantial improvement. Is that something that we plan to, that's something we will maintain, or we will see further growth?
So I would not want to, talk on the NIM side of it, because obviously the base basically distorts the overall NIM calculation. As and when you are stable, at that point of time, the NIM, makes an impact or is considered to be effective in terms of overall calculation. If I talk about the spread, as I said, we will continue to have a incremental spread of 450 to 500 basis points on the incremental lending that we'll be doing from here on, and that is what we are going to maintain, and that is going to get translated into the NIM as and when the asset side builds up here.
Right. So I think it's a good trajectory from here on for everyone to follow as well. Thank you, Kalpesh, so much for joining us on the show. Always a pleasure to speak to you. Congratulations and good luck for the coming quarters.
Pleasure is all mine, Nirmal. Thank you so much.
Thank you.
Well, thank you so much.
Yeah.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.